Hello everyone and welcome to Smart Investing again. This is the video for the banking services sector. I only have 5 stocks. I don't have like 20 stocks or 10 stocks. I'm gonna make this a very quick video. Hopefully it'll be very fast. So again, I only have about 5 stocks and we're gonna start off with the first one. Again, let me open this all over again and start from scratch. So thank you guys for tuning in, watching the channel. If this is your first time here, again, my name is Albert, and again, this is the banking services sector. So what I do here is I do a process on sectors, and I try to do them in order. I'm trying to do them in alphabetical order. I have a whole bunch of sectors that are listed in order. So the banking services sector is like the hardest because they have like 700 stocks. So yes, I'm crazy enough to go over all 700. So not only for your research and informative process, but for mine as well. And then also, so not only can I recognize the names, so you can recognize the names. So once you start seeing my videos and you can start, I know it's a lot of information at first, but even if you skim through it or fast forward it or whatever, it's just very useful information. And then you can start recognizing the names and like, oh wait, that stock did good. I remember you mentioning that stock before, even though I didn't invest in it, I remember watch listing it or you talking about it. I remember, you covering that company. So this is what I do. I'm different from other channels because I try to cover other companies. Again, I'm dedicated to what I do, and not only for me, this video is also for you. So let's begin. I'm only going to do 5 companies. First company that I have is BPRN. I do a fundamental and technical analysis. I try to do it fast. I know some people might not keep up with me, but again, you can always slow it down, the speed on the video. Again, if I'm going too fast for you, you can always slow it down on the settings. Because again, I don't want to take up too much of your time because I do like going into deep dives. What I mean by that is I like doing a full analysis on a stock, but I do the fundamentals and the technicals. So again, that takes a few minutes. You can't it don't take seconds. It takes a few minutes. So again, I try to do and provide as much information I can with little time as possible. So there we have it. So we have BPRN at $29.10. So first thing I'm noticing, it's on a downtrend. The 5-year chart, it looks horrible. I don't like it. 1-year chart looks flat. 3-month chart looks down. 1 month looks volatile. I don't like this stock. It shows strong earnings. It shows that it's undervalued. Dividend is they're paying something, and the dividend yield is at 3.4. Now we look at the 52-week high and low. That is not even a $10 difference. That is like about a $7 difference for the year. I don't like it just by looking at those numbers. So what I do is when this doesn't even pass the first page of my test, I mean, it makes no sense for me to actually do a deep dive. So this is why I know people might get confused with the way I analyze stuff, but if this is the first page that I'm analyzing and it can't even make my second page of analysis, then there's no sense of going to the second page if it can't even meet requirements on my first page. Like, it has to pass like everything on here. So, I do a strict process. So that is why, I do this kind of stuff, because when everything passes, things tend to do good and things tend to favor in your behalf. Because when you do the due diligence and the hard work that involves around it, then you start to say, wow, like, it makes sense. I'm making money, I'm profitable, I'm earning dividends more than I should than a stock that I saw before, because I did my homework. Not just me saying that, but now you can say that too. Like, wow, I saw this channel and now I feel like I'm doing my homework. I want people to feel like that, like as if they're involved with as much knowledge as I can give out. So just doing a quick update on these. So again, I don't like doing the deep dive, but for you guys, I know you guys want to see this, so I'm providing it. They do have the dividend history list here. So we have here a raise of about 2 cents from 2020 all the way to 2021. So in 2021, they gave a 6 cents raise. And then from 2021 to 2022, they gave a 7 cents raise. So every year it looks like they've been giving a good raise. So the raise is not as important, I think, for my opinion, to invest in it if the capital gains aren't there. So which is the actual price. So we have here 29 and 10 cents, but yeah, you're getting the dividends, but over 5 years, if you pay 29 bucks, you're pretty much flat for the whole 9 years. That, again, I'm not licensed or insured, but not only looking out for myself, but if I was licensed and insured, it wouldn't be correct, or it wouldn't be just that people are investing in you and you're taking their money, and you need to provide a service and a clientele to service those people that you're working their money in your favor. It's like they're trusting you with their money. I mean, am I saying this right? Hold on, let me think before I say this. They're entrusting you with their money, and basically investors, not everybody, I'm just saying other investors, most likely they entrust a financial advisor to grow their money. And if they're not growing their money, then what's the sense of keeping that advisor? The reason that I say that is because not me, everybody has their own favorite investors and stuff like that, but I always hear Kathy Wood. Kathy Wood, her name gets mentioned a lot. Again, I don't like pay attention to her. I do my own thing. The only thing I do have to say is that she used to be a good investor. I think her best days are behind her. As of right now, I don't think she's a good investor. So I think she's a lot on hype. And again, if I lost 40-50% on a year, or even in a few months, I think I'll have to evaluate my process, and I'll feel very bad for investors, and I would actually start to do a learning process and restart my thinking process all over again. Because if it's not working throughout time frames each quarter, then you're only pretty much losing, and it's almost like you're guessing. And the stock market, you really don't guess, you do. And again, hope is not a strategy. I've mentioned that before. So there's always free learning tools. You could always research. There's always so much information out there. You just have to be willing to learn, and just go out there and research and do your homework. But again, if you don't want to do all that, you could always watch my channel. I try to teach as much as I can. So with that said, let's move on. Like I said, dividend stocks, do they have any splits? No, they do not. So that's all I have for this stock. I don't like it. I don't recommend it. I wouldn't say watch listed. So move on to the next one. Next one is CLBK at $21.60. Columbia Financial. Looks pretty active, slightly overvalued for what I'm seeing. This looks like a nice stock. I like the chart. It could be a little bit more active, so definitely a watch list. But that is the 5-year. Let's look at the 1 year. They have been growing. They're starting to be flat, but they haven't dipped too much, which is good. And again, they are relatively cheap, even though they are flat. So you have this little spike here, which is good, and drop back down. So I don't see a downtrend. I just see that little spike right here, and hopefully it's a nice time to get in, and maybe the money flow would go into this stock eventually. But again, makes a nice watch list, I think. And again, Columbia Financial, ticker symbol CLBK. If you want to do a full-blown analysis, again, I don't charge anything. I don't do none of that. But again, if you want to talk about the business model, I usually don't mention that, because in general, banks all do the same thing. They just kind of loan out money, and they want to get a fee on top of what you're paying. The fee is also called the interest. So, they want to collect that interest on top of what you owe them. So it's like you owe them the money. Let's say you borrow $100, but then it costs a fee to borrow that money, $10. So I'm pocketing $10 extra, and the total is $110. So a person would pay, $110, and it's again a certain amount of time frame. So again, the business models are usually the same. It just depends who they loan to and how much and all that good stuff, and term limits and income limits and whatever else, and whatever hassle banks want to do. But typically, business models are usually all the same for the banks. So again, I know I'm using PE. PE is not a good metric. But another time when I do review bank stocks, probably years from now, I'll use a different metric. But for this video and this ongoing video, and for the past videos, I've been using PE. So I'm going to stick with that. So CLBK, I did that. So MOGO, I do not like it so far by looking at the chart. It's way too cheap. Way too cheap. Seems very risky. I don't see an uptrend at all. I mean, and it's like a double-edged sword. I mean, even though it's on a downtrend, you kind of think it's good because it's cheap, but then it's like you don't know if it's gonna go up. And it's hard to say because the activity for this stock, and that's just the best you can do. Day to day and week to week it changes, so you just never know. You just have to keep an eye on it. When I say keep an eye on it, like every day, and see if there's activity. If there is, then can wait it out, and then hopefully it'll take off like it should be. So I don't have information, not too much info, so I have hardly any. Volume is slightly lower, but again, I could be wrong on the volume, on the activity, because the market is closed. So when it opens, it might be more activity, obviously. So then we have no dividends, and they are consumer lending. So they're not a bank; they just do consumer lending, which is a little different. And they are in Canada, so the corporate headquarters are in Canada. Let's do a deeper dive on this stock. So let's see, they are negative earnings. Let's see, their debt pretty low for a consumer lending business. And overall, I don't like it fundamentally, but Let me see for technicals. I don't like it. I don't like it. I don't like it. See, we have here the 52-week high. It feels somewhere like halfway in between that. Like, a little bit above the 52-week high and a little bit below above the 52-week low and slightly below the 52-week high. And now we're talking for technicals. And then for fundamentals, I don't like it either. I don't like it for either one. But again, it depends on the stock. Some stocks are just really good technicals and fundamentals. Sometimes you have stocks that are good only for fundamentals, and it just depends on the stock. And that's what the evaluations are about. So again, I don't like that stock, and we're gonna move on to the last two. Next one up is 2D5. That's a weird ticker symbol. So the ticker symbol is 2D5. Company is called Credit Acceptance. I think this is a different, like a stock market indices. So what I'm trying to say is that this is not, I don't think this is a U.S. company. This might be overseas. I could be wrong. But it's just the ticker symbol looks weird. I rarely see numbers in a company. Yeah, this stock is dead. This stock is dead. Look how flat that looks, and it has like no volume. I don't like it. Yeah, you have a 52-week high and low of 600 high, 426 low, but nothing. There's no activity, no nothing. So somebody got stuck with the crap bag. Somebody got stuck with the crap bag. PE. Yeah, you see this flat line here? Look at that flat line right there. That was from 2020, from April all the way to the end of the year. So somebody held the bag and somebody sold it, and it looks like around here somebody's stuck with the bag again. Yeah, stay away from this stock. It's horrible. That's all I can say. So I'm gonna move on to the next one. Last one up I have is ZIONP, Zion's Bancorp. So we have here. Oh, that's an ugly stock as well. Volume is awful. Let's look at the dividend. They paid 25 cents for the past like 3 years. Hasn't even grown the dividend. That's awful. This is a flat stock. If they flat dividends, let's look at a deep dive just for looking at it, I guess. Just to look at it. 91% debt. That's typical for a bank. And we have here net income, revenue. They all look the same. It's like everything is flat. It's like everything is flat. It hasn't even moved. It dropped in 2020, then it went up, but that's about it. I don't like it. Stock is horrible. Stock is horrible. So, that's pretty much it. So we have those 5 stocks, and that's it. That is the end of the video. So thank you guys for watching. I'm going to do more banking sector stocks. I hope you guys enjoyed the video, and I'll see you guys in the next one.